Hello everyone, myself Namutullah Hanif Mullaji and my today's topic insurance industry and claim management. Let's see what is meant by insurance industry and claim management help a presentation. Here my topic name is insurance industry and claim management. First, insurance industry. The word of fear has only four alphabet like love, but both of them they have very difficult meaning. Whatever man, male or female, does for the love of their family always start with the background of fear. Generally, so many times we have been asking ourselves that what will happen if we were not there, but we keep our asking that doing something for it. Time is precious, it's never stop for anyone, and we are living in the world uncertainty of job, uncertainty of money, and the uncertainty of property. And like this story goes continuous for whole life of man. After that, insurance. The insurance is from the risk management which is used protect against the risk of uncertainty loss. Premium is the price payable by the insured of the insured by the risk uncertainty. After that, insured amount is the amount for the which the policy is taken. An insurance policy is document which continues the term of condition and contract of insurance. The definition of the insurance is a means protection from financial losses. It is a from risk management primarily used protect against the risk of continuous or certain loss. After that, the type of insurance, first general insurance and life insurance, personal insurance, rural insurance, industrial insurance, commercial insurance, life insurance, whole life plan, endowment plan, term plan, and pension plan. So general insurance cover insure of property against fire, theft, personal insurance, health, travel, accidental. This part of in general insurance. And unlike the life insurance policy, the term of general insurance policy is not only lifetime. Some of the types of general insurance policies are fire insurance, motor insurance, health insurance, travel insurance, home insurance, marine insurance, rural insurance, and personal accidental insurance. So first, fire insurance. Fire leads to reduction of property, valuable and even life. A fire insurance policy protect the policyholder from the risks that occur due to the outbreak of fire. Motor insurance protect your vehicle from damage of theft that are caused of vehicle due to on-road and off-road emergencies. Motor insurance is mandatory compulsion in India as per Motor Vehicle Act 1988 and needs are renewed benefit of year. After that, the third party insurance is a statutory legal and requirement in country that is the owner of the vehicle is liable of any injury or the damage cost of third party like property damage and the arise because of the use of vehicle of public place. After that, health insurance. Healthcare costs are increased every year due to urbanization, that stress, work, and uncertainty of lifestyle. Health insurance cover the medical and surgical expenses of the insured due to hospitalization from the illness. Health insurance policy help to reduce the financial risks associated with the healthcare and incur cashless facility, a certain hospital, pre and hospitalization expense, ambulance charges, daily cash allowances, etc. After that, travel insurance. Travel insurance in domestic and international travel involve risks like loss, baggage loss, passport, theft, mislanding, baggage, medical emergency, etc. Travel insurance, also known as visitor insurance, protect the insurance against unseen medical and non-medical emergency during travel insurance and hassle-free travel expenses. After that, next point, home insurance. Home insurance is the most treasurable position and the largest financial investment in individual. After that, home insurance protect the home from natural and man-made disaster like fire, theft, flood, earthquake, etc. After that, marine and cargo insurance. Marine of cargo insurance, movement of goods across nation and international borders involve the risks can be lead damage of shipment, those leading to financial loss. Marine insurance cover all damage caused during transit by the rail, road, sea and air. After that, the rural insurance. Rural insurance provides insurance solution if the road of trades, agriculture and rural businessmen. After that, personal accidental insurance. So personal accidental insurance, this type of insurance protect from personal or group person from every injury or disability caused due to accidental or any other event. Personal accidental insurance provide 24-hour worldwide insurance protection. After that, life insurance. Life insurance is a form of contract under which the insurer undertake to pay the insurer a certain amount of money, either of the death of the insurer after the expire of the contract. A life insurance policy undercomes the term life plan. Term plans insure provide financial protection to the policyholder for a specific period of time. If the policyholder survives the term period, nothing is payable in case of his death, and his beneficiaries are entitled receive the sum of amount. Second point, endowment plan. Unlike the plan, an endowment plan provides the sum along with the profit to the policyholder in the event of death and survival of the policy. And also once B contract is if expired, however a premium paid by the policyholder also is high. After that, unit link insurance policy is called ULIP policy, help the insurer protecting him from the risks and also unable of invest. However, the performance ULIP is like to the market scenario, the allocation in the stock debt market can be decided by the investor. Next point, whole life insurance policy. Here, the policyholder pays a regular premium until his death and and thus enjoy life cover throughout his life. After his death, the some amount is paid of his family, and however in case and eventually after the policy expire there is no defined tenure of the policy are given. After that, money back policy. In money back policy, here the insurer get protection the sum of insured regular intervals of the policyholder survival of the term of the given for the beneficiary. After that, group life insurance policy. Here a group life individual are converted under a common life insurance policy is very common in is expenses and expires. After that, pension plan. The pension plan are one of the best investment plan for the retirement holders of the future. After that, reinsurance. Reinsurance also as known as for insurance of stop of loss insurance in the practice of insurance and transforming protection of the risk portfolio and other parties of the sum from agreement to reduce the likelihood of the having to pay large obligation resulting from the insurance of claim. After that, the third party that diversify of insurance portfolio is known as the certainty regarding the party that accept portion of the obligation in exchange for share, and insurance premium is also known as of reinsurance plan. After that, some types of reinsurance. First, faculty coverage. This type of policy protect an insurance provide only for an individual or specified risks of contract. If there are several risks or contract that needed to be reinsurance exchange, one of the most negotiable separately. The reinsurance has allowed the right of accept of any of faculty reinsurance of proposal. Next point, reinsurance treaty. Unlike faculty policy of the treaty type of coverage in the effect for a specified period of the time rather than per risk or contract basis for the duration of the contract, the reinsurance agree to the cover of all proportion of the risks maybe is incurred by to the insurance company being is covered. After that, next point, proportional reinsurance. Proportional reinsurance under this type of insurance and will be receive a proposal of share premium of all policy sold to the insurance company being covered, and consciously when claims are made to the reinsurance will also bear a portion of the losses. After that, non-proportional reinsurance. In a non-proportional type of coverage, the reinsurance will be only get involved of the insurance company of losses specified amount which is referred to the primary relation of the limit. After that, hence the reinsurance does not have the proportional share of the premium and losses of the insurance provider. The property of reinsurance limited may be based on a single type of reinsurance entire business category. Next point, excess of loss reinsurance. This is actually a form of non-proportional coverage. The reinsurance will be only cover the loss of exit of the insurance company related limit of the however what make the type of contract unique of the type typically applied the categories event the excess of reinsurance policy cover the insurance company either a per occupy the basis or the cumulative loss within the specified time of period. After that, next point, banca insurance. Banca insurance is an agreement in which a bank and insurance company form a partnership so that the insurance company can sell its product to the bank client basis. The percentage of the agreement by the profitable for both companies. Bank can earn additional revenue by the selling the insurance product while insurance company are able expand their customer where without having a expand of sale forces pay commission to insurance agent and the brokers. After that, the need of banca insurance. The banca insurance to improve the channel through which insurance policy are able to sell the market to as make them reach up the hands of the common man. After that, to widen the area, the working of banking sector having network that separate wisely and every part of nation to improve the services of insurance by creating a competitive atmosphere among the private insurance company in the market. After that, benefit of banca insurance if encourage customer of banks of purchase insurance policy and further help the building better relationship with the bank. The people who are unaware of and not rich of the insurance policy can be benefited through wisely distribute banking network and better making channel of bank. After that, increase the number of provider mean increase the competition and hence people can expect better premium rate and better services from banca insurance to compare their traditional insurance company. The banca insurance provided this type of services of all mostly of all nationalized bank. After that, the next point, claim management. So claim management, an insurance claim is a formal request to an insurance company asking for payment based on the term of the insurance policy. The insurance company review of the claim for the validity and the pays out of insurer of requesting party on once approved. After that, insurance claim cover everything from death for benefit of life insurance policy to routine health exam of your local doctor in many cases. Third party file claim of behalf instead of person by usually only the person listed to the policy in her to channel to pay off payment. After that, health health insurance claim. So what is meant by the health insurance claim? Health insurance is an insurance product which cover medical and surgical expenses of individual and replacement of expenses incurred due to injury of illness of the individual. After that, it is a contract between the insurer and the individual group which the insurer agree to provide specified health insurance cover of a particular premium of the subject to terms and conditions specify the policy. After that, how to make a claim for the health on cashless basis. So first, for a claim on cashless basis of your treatment, most of the only a network hospital of the third party admitted who of servicing of your policy you have seek authorized in available treatment on cashless basis as per produce late and the parties from the any of any other form. Please read the carefully and the policy document as soon as received from the families yourself with the process of them wait for the claim arise. After that, next, life insurance. Life insurance policy. How to make the life insurance policy? First, when a person with a life insurance policy called life assure dies, a claim information should be sent by the insurance company as early as possible. After that, the claim information should be contain information like the date, place, and the cause of death, and the insurance agent has been duty to help the life insurance family against the deal with the insurance company to fulfill formality for a claim. After that, the insurance company will respond the information and will ask for the following helpful documents. The documents which the certificate of the death is very important part of of life insurance. After that, policy document, dates assignments, and after that, legal evidence of title. The policy is not assigned of the nominate for the discharge executive and witness to take the life insurance policy. After that, other documents such as medical certificate, hospital certificate, employee certificate, and the policy request certificate, and after that the report could be called for a applicable. After that, so our next point is fire insurance. In fire insurance, claim procedure. First, notice of loss. When the loss occur due to fire, the known should be give notice of the insurer. Therefore, insurer cannot be liable to meet claim unless receive a notice claim for the insurer. Hence, the insurer immediately after the occurrence of a fire should give notice of loss to the insurer, register the claim of the loss by fire. After that, evidence of loss. The notice of loss should be accompanied by the evidence of the loss, the time, place, and circumstances under which the loss and incurred should be mentioned of the role played by him to migrate the loss. After that, the claim the loss and insurer must have taken necessary system to migrate the loss. After that, formal claim form. So in formal claim form, on receipt of notice, the and sends to claim for the insurer, the insurer should be submit this form along with detail and evidence to be insured enable the insured of determine the claim. The form of contain all death and of the damaged property and market value of the damaged property. Sometime for insurer required to send evidence along with the claim of form. Next point, inspection of loss. After receiving the claim for the loss, inspect by the expert known as survey of valuers and the survivors estimate its value, the loss and send their report to the insurer regarding the nature and causes on fire. They also carry out of salvage. After that, ascertainments in losses. After inspection of the site of loss and other information collected the survive associated with the total extent of losses determine the liability of the insurer while accepting the loss of survey take into account the time of the fair number of policy taken to the scene by the subject matter and cause of on fire. After that, average cost. Average cost in the ascertain the value of loss survey have to see the whatever the policy subject to have average clause. If they have average clause, the unchanged property also take in the value. After that, in case of average policy, the insurer liable to pay the only such proportion of the loss to insure bear of the total value and the property. So next point, estimation of claim. In the estimation of the claim, the fire occur more than one time. The currency of one fire policy insurer is not liable to pay more maximum amount insured unless the insurer has paid extent premium in the subject matter of insurance and insurance with the more the one of the insurer in the claim is be settled through the use of contribution clause and liability to each insurer is limited of the liable proportion. Sometimes there is a damage and destruction of account and record due to fire and therefore the claim cannot be determined in such cases. The value of stock and the value of the loss estimated by preparing trading and the profit value of the loss and estimating the past of ratio of boss profit is applied in current year also and the boss of the profit and estimated on the basis of the survival with the excess of amount of loss. So next point, payment of claim. After asserting the amount of actual loss, the survivor of the declaration from the insurer regarding acceptance claim and the send of the along wants to their repair to condition of the policy. After that, settle the claim and according with the term of the fee, the claim may be settled cash payment or replacement of insured property of reinvestment. After that, our last point is rejection of claim. In rejection of claim, in some of cases, insurance company may be reject our claim. The generally in the following cases, the claim may be rejected if there is no insured interest at the time, loss of the time of taking claim. After that, when the principal at almost good faith is not observed. So when the loss has been arise from ills excluded of the cases in the policy. After that, if the loss had occupied due to the defect of the insured property which has not disclosed of the time of taking a fire of policy. After that, if the insurer has not taken all possible steps of migrate of loss, etc. After that, marine insurance. How to claim for the marine insurance and what is meant by the marine insurance? Marine insurance, in case of any loss of damage, the cargo, it is duty of the insurer and its agent of representative to take the following procedure is very important in case the check or carefully condition of the condition and the pay to the damage and paying the insurance after check carefully condition out of seal and the number of is matched with the document if was damaged of or cut. After that, check carefully it is what found of damage, give such notice of loss, damage and delivery order. After that, immediately contact the carrier of the representative due to the survey. After that, immediately contract to insurance company to do joint survey. and giving the notice and immediately no policy in case of traffic accident there are other miscellaneous act. After that, take photograph showing date or any problems, giving the all details about that condition, its seal of the number of floor, well and rule, where is damage and condition of the cargo. After that, write claim for the certain holding, the responsible of loss of damage. After that, the next point very important, and that cargo claim, the giving the survey and reporting to the insurance company. So claim shall be reported immediately to the insurance company of his survey agent in order have damage is instead on condition cause of loss damage, and claim reporting shall not later than 7 or more days. After that, the loss of damage or notice. After that, the documentation we need that claim form after an original bill certificate, original bill, invoice, packing detail, delivery order, and giving police report is very important part of claim. After that, the salvage it is a duty to ensure its agent or the repayment of the migrate of loss secure to salvageable can be due to destroy sale them without insurance company within the approval. After that, our next point, motor insurance. So motor insurance deal with insurance cover for the loss or damage caused to the automobile or its parts due to natural man-made climate. It provides accidental cover for individual owners of vehicle while driving and also passengers and the third party legal liability. After that, if what is the benefit of the motor insurance? Provide benefit survive when an accident result in death. It cover lawsuits including legal fees brought against the vehicle and repair. After that, damage caused by other than an accidental, example fire, etc. After that, how to claim of motor insurance for personal injury or property damage related for some else. This person is called third party in this concept. After that, for damage your own insured vehicle, this is called unowned damage claim, and you are eligible for this type. You are holding what are known of the package and policy. After that, the third party claim insurance in the party claim where your vehicle involved. It is important to ensure that the accident is reported immediately to the policy where to the insurance company. After that, on the other hand, if you have vehicle that it's somebody has stolen, was involved, or you must be obtain the insurance detail of that vehicle, make an animation of the insurance of vehicle and claiming. After that, own damage claim, and in the own damage event, unowned damage claim, that is where your own vehicle is damaged due to an accident. You must immediately inform insurance company and policyholder. After that, whenever required, enable them to depute of survey of access the loss. Do not attempt to move the vehicle from the accident spot without the permission of police and the insurance company. After that, once you have received permission to remove of the vehicle and repair for you can do. After that, if the policy provide for survival of the, which means you do not have to pay out of your pocket for cover and damage. And after that, insurance company will be paid as workshop directly. And is either of the theft situation, you must intimate of the insurance company and immediately. After that, our next point, theft claim. So theft claim, if your vehicle is stolen, you must inform your police and the insurance company immediately. After that, in additional, you must keep the transport department also informed. As soon as you receive the policy document, read about the procedure and documentation requirements for claim, and then wait for the claim to arise. if you have to make a claim, ensure that we collect all requirement and document and submit them along with the requirement claim from the field to the insurance company. After that, they may have certain specific documentation requirement for specific type of claim. For instance, is respect of theft claim, there is specific requirement for you should surrender vehicle keys of the insurance company. After that, the role and importance of actuary. The actuary is the business professional who deal with the measurement and management of risks and uncertain. The name of the corresponding professional of actuarial science. These risks can affect both sides of the balance sheet and requirement asset management, liability management, and the valuation skill. The provide assignment of the financial security system with the focus there the mathematics and their mechanism. After that, the some role in insurance. The role in insurance, the majority of equitize work of health, life, property, and casualty insurance to structure insurance policy in way that procedure, high yield, and industry competitive premiums. In life and health insurance, acquires access risk factor such as type of professional state residence, pre-existing medical condition, and the certain lifestyle choice like smoking. In property and casualty insurance, which encompass both personal and commercial line of insurance focus on risk factor such as frequency of weather related event in given religion. After that, the like of theft, product liability, and employee environmental risk. Next point, calculating of cost. Calculating of cost, understanding these risks factor provide equaries with the science needed to generate reliable mathematical compositions for determining the anticipated number of claims and the amount of consumer should pay insurance coverage. Next point, role in pension. The role in pension outside of insurance, actuaries provide their expertise of serving and the pension actuaries and according to the institute and the faculty and the actuaries pension according provide specialized advice of the company of the determine how much money is needed to pay future pension benefit and the impact this payment will be have to companies by studying factors such as retirement age and life expectancy. The actual determine of the risks involved in offering a pension plan as a part of benefit package. If significant risks at present the company many have done of the pension plan of the reserve is to provide a company reserve of pension structure by the calculating and suggesting the highest amount of a company should offer employee while avoiding the financial routine and plan. After that, the role and importance of actuary. The actuary is the business professional who deal with the measurement and management of risks and uncertain. The name of the corresponding professional of actuarial science. These risks can affect both sides of the balance sheet and requirement asset management, liability management, and the valuation skill. The provide assignment of the financial security system with the focus there the mathematics and their mechanism. After that, the some role in insurance. The role in insurance, the majority of equitize work of health, life, property, and casualty insurance to structure insurance policy in way that procedure, high yield, and industry competitive premiums. In life and health insurance, acquires access risk factor such as type of professional state residence, pre-existing medical condition, and the certain lifestyle choice like smoking. In property and casualty insurance, which encompass both personal and commercial line of insurance focus on risk factor such as frequency of weather related event in given religion. After that, the like of theft, product liability, and employee environmental risks. Next point, calculating of cost. Calculating of cost, understanding these risks factor provide equaries with the science needed to generate reliable mathematical compositions for determining the anticipated number of claims and the amount of consumer should pay insurance coverage. Next point, role in pension. The role in pension outside of insurance, actuaries provide their expertise of serving and the pension actuaries and according to the institute and the faculty and the actuaries pension according provide specialized advice of the company of the determine how much money is needed to pay future pension benefit and the impact this payment will be have to companies by studying factors such as retirement age and life expectancy. The actual determine of the risks involved in offering a pension plan as a part of benefit package. If significant risks and present the company many have done of the pension plan of the reserve is to provide a company reserve of pension structure by the calculating and suggesting the highest amount of a company should offer employee while avoiding the financial routine and plan. Insurance securitization. Insurance securitization can be as defined as transforming of underwriting risks to the capital market to the creation and insurance of financial securities. In that capital market developments, investor and capital market have become mature and aggressive. The capital market are always on lookout for new asset classes and asset-backed market. An ideal area for investment is one of that will provide high yield with diversification of benefit. After that, structure of the insurance industry. A significant trend has been occurring recently in the insurance industry, merger and acquisition, and consideration. In addition, there have been discussion regarding possible determinants on all activity suggests that the industry is becoming ever more and driven by street and the financial market. After that, the pricing of insurance product competition is forcing insurance adjust rates more frequently to retain exercise customer and attain the new ones. Insurer looking to implement a price optimization strategy must consider these essential of components. Insurance looking implement a price optimized strategy must consider these essential of components. After that, the main important point of pricing of insurance product information management. Key to the success of using pricing optimization is the quality and quantity of the available data, especially claim and customer data. Second, data exploration. The emergency of business analytical software like data exploration and virtual tool help to the ensure refine their analytical and evaluation of certain risks eliminate. For example, 20 years ago, credit score was probably demand and new is probable most use of variable determining of the premium rates. After that, predictive modeling. The predictive modeling, the insurer must use adjust of tool to the perform what is simulated of scenario testing of forecast future behalf and improve the underwriting performance of the insurance company. After that, the next point, high performance analytics. To process the large of data quantity and perform complex analytical calculation ensure need of memory and distribute computing of environment. The next point, competitive intelligence. Price optimization require in-depth understanding to the competitive landscape and pricing strategy to the customer and buying of performance. Especially in this line, the business where the price of determined or determination such as auto home, some commercial lines, price optimization, repayment of the future of the insurance. After that, the risk classification. The risk classification, also known as the risk class, is used to determine the premium on your life insurance policy. From main factor are used to determine the total premium of your age and the amount of coverage, the number of year and the coverage is guaranteed and the risk of class. After that, the risk classification determine every life insurance company has different underwriting guideline that determine what risk class an individual quality for the company will look at your personal medical history, smoker status, height and weight profile, result of the medical exam, your family medical history, example, cancer or health disaster, health disease before age in 60, immediate family, a family member, motor vehicle, record, and any hazardous activity. You may be participate in such a aviation, scuba diving, and drag racing, etc. Since every company has different guideline for qualification, one might offer a better risk class the another based on the above information, the resulting in the lower the premium for the same coverage. Because the giving the same above information in the risk classification, giving the same data of the life insurance risk classification are relatively uniform throughout the industry with the some minor variation. The most common risks, are come the classification in the preferred plus, the preferred plus or the preferred elite, the superior health, normal height weight profile, number of illness lab result within the normal range, no immediate family member or no immediate family member dead from the heart disease or cancer before age of 60. After that, second, the preferred. So what is the preferred? Excellent health, height and weight may be in a little owner the most preferred range treatment for high blood pressure or high cholesterol, usually acceptable lab result normally or silently abnormal. After that, the preferred smoker, some journal guideline as preferred but with the use of tobacco product in the part of 12 months. Some companies offer non-smoker rate for smoker life insurance is only using chewing tobacco or cigarettes. After that, the standard plus better than average health and height and weight is higher than the normal. After that, which is standard classification. In the standard classification, average health, normal life expectancy, height and weight may be on the high side. Possible treatment for severe minor condition. One of the more parents dead from heart disease, cancer before age 60. Silently evaluate lab result such as higher than normal blood pressure of or cholesterol. After that, standard smoker. In the standard smoker, the same journal guideline as standard but with the use of tobacco product in the part of 12 months. Some companies offer non-smoker rates and for smoker life insurance if only using chewing tobacco or the cigarette. After that, substandard. Again, the substandard classification in below average life expectancy, high of risk life insurance. Height and weight maybe is considered observed treatment for illness or major health conditions. After that, such as period, heart attack, cancer disease, abnormal lab result. So after that, we just see that all type of insurance like life insurance plan, term insurance, health insurance, home insurance, and more. The core of any insurance plan, we are just yeah, shit, yeah. There are we are okay. So we just seen there are various type of insurance product like life insurance plan, term insurance, health insurance, home insurance, and more. The core of any insurance plan is to offer you with protection, providing like protection of migrating of your risks at the simple motive of insurance, making that small investor in any insurance plan will be unable to be tension free and offer security in advance. Insurance is just not a tax saving tool but also offer several key. But safety and protection in advance and be smart. Life is very uncertain and has a way of throwing surprises at you when you least expect. In order to be fully prepared to deal with the contingencies in life, insurance is very essential. Live a peaceful life and manage your risks that you can face in everyday life. Secure your life with insurance and ensure that you live and your tension free. With the rising medical cost, health insurance is mandatory to hold protect you and your family with the coverage of your health insurance that will provide for you health care and cost. Thank you for joining. Stay home, stay safe.